So we know that all of our legacy assets, our homes, our cars, everything can be insured. But it came across my mind that Bitcoin can't exactly be insured. Maybe in the short term it can while we still have this fiat system, but there's something fundamentally different with Bitcoin that makes it impossible to actually insure, and that is its finite supply. If we have insurance based on it, that insurance will be denominated in US dollars, and if we move in the direction of hyper Bitcoinization, then those dollars would become worthless compared to the Bitcoin that they are backing, right? So we're backing something finite that increases in value with something infinite that is decreasing in value. So there's fundamentally something incorrect with the insurance of Bitcoin. And I just wanted to get your guys' thoughts on it, and maybe we could just discuss that idea.
Let me start off first. I'm going to give a little disclaimer here. This is not my area of expertise, so I'm going to be just like the people sitting in the audience watching this one. But my first thoughts on this is very similar to the U.S. Strategic Reserve Bill that Senator Lummis is putting through right now. They have these big plans within the U.S. to buy 1 million Bitcoin over 5 years. Sailors talked about them buying 4 million over 10 years. They have these big aspirations, but I just don't see how that's possible. And I think this ties in really well with the insurance part of things. Is like, yeah, you lose your Bitcoin, we'll give you some money, but like there's no guarantee that you're going to be able to get back that Bitcoin, especially the amount that you're going to have to pay for it now. Is that kind of where we're going with this, boys?
Yeah, I think that's it, right? At some point, if you, let's say, for example, you have 1 Bitcoin in your wallet and you have it insured in case somebody comes to your house and robs you, takes your Bitcoin from you. Let's say 10 years from now that happens. The value of the Bitcoin when you got it insured was $100,000. And 10 years from now, it's worth $1 million. Is the insurance company going to pay you $100,000 or 1 Bitcoin? That's where it gets very complicated, because the insurance company has to have that 1 Bitcoin accessible in order to pay out your claim. And they're probably not going to do that, because if you think about it, they're just going to have to hold that 1 Bitcoin. Nothing else outperforms Bitcoin. They can't hold bonds. They can't cash out those bonds later on. They can't hold US dollars, because US dollars are going to constantly lose value. They can't hold stocks and then turn those stocks into Bitcoin later. They have to actually hold Bitcoin. So what they would have to do is they'd have to find a way to pay back your Bitcoin. And if they can't, then they go bankrupt. So in the current system, because the value of our insurance premiums keeps going down. Let's say, for example, not the value of our insurance premiums, the value of our insurance payout. So let's say, for example, I got insurance on myself in case something happens to me. My wife would get a payout of, let's say, $1 million. Today, $1 million is worth $1 million. But let's say 20 years from now, something happens. What's that $1 million going to cover? It may not even cover. It may not cover a car for all
Your
we know.
funeral.
Right. It may not even cover my funeral. Exactly. In $1 million in 20 years is going to be worth next to nothing. So what do you insurance? If you get insurance on your Bitcoin, what are you getting it based on?
Yeah, I mean, you kind of have to understand how insurance companies work, which is they charge you a premium up front, and they usually take that premium and invest it, right? So they actually do something called a float. So this is how insurance companies have been profitable over time: is they have all the collateral and they invest that in something relatively safe, and then they create basically percentages of the amounts of payouts they'll have over time, and then they'll allocate a certain amount of the float to those payouts, not expecting all of the payouts all at once. But exactly what Rajat said, if you have Bitcoin and you have it insured, how are they going to outperform Bitcoin? They're not going to outperform Bitcoin by having this float in treasury bonds that return a negative real rate. They have to basically back it by the same amount of Bitcoin. If it was fully insured, it would have to be like a 2-to-1 backing of Bitcoin, not just have your Bitcoin, but an additional same amount of Bitcoin in case yours got lost or stolen, right? And another kind of similar example would be like what happens with these exchange failures. So like with FTX, you have your Bitcoin on FTX. They declare bankruptcy. That Bitcoin gets totally frozen in that moment, and then you get a payout, which is basically like, you could almost think about that like insurance in a way, because they're paying you back your Bitcoin, and they're doing it even at more than 100%, but they're doing that in fiat terms based on when the incident happened. So you could relate that again to an incident that would happen with your Bitcoin if it was insured. But in this case, it was a bankruptcy of this exchange, and yet that they're paying you back 110%, but they're saying that Bitcoin was 20,000 because that's when FTX declared bankruptcy, and now Bitcoin is at, it's in the 80,000s. So they're just, what they are showing is that they were not backed one to one. They're not over backed in an insurance way. So it really just begins to fall apart, the insurance idea when it comes to Bitcoin, because of how well Bitcoin performs, and because it's actually completely scarce.
So FTX didn't actually have any Bitcoin, right? That's kind of the issue here, is that they didn't have any Bitcoin on their books. They claimed to. They had a bunch of deposits. They had a bunch of other things, but they actually didn't have any Bitcoin on their balance sheet. So they didn't have the Bitcoin to pay out to people. I think that's a great example using FTX in the same kind of light as this. So to me, it seems like Bitcoin is really going to flip almost every industry on its head. The banking industry, obviously, the mortgage industry, the insurance, and I don't think that the insurance is going to be immune from this. So what do you guys think is the answer to this? Is it going to have to be like you pay your premiums in Bitcoin, or what's going to come from this? Because I think that this is it's an asset now we're starting to see where a lot of things can go wrong. If you're taking this stuff lightly, there's been about, I don't know, 4 or 5 million lost Bitcoin in the first 16 years here. And I expect it's probably just going to keep going up and up and up. Like, where do we go from here? Because if people can't really feel comfortable with their Bitcoin or secure, that's the thing that insurance provides to people, right? Is that security blanket. They pay some fees for it, but at least they know at the end of the day, if something were to happen to it, they're going to get their assets back. So where does Bitcoin go from here? How does this work within Bitcoin? What's the play here?
So the way that
needs to be, yeah, you go ahead, Rajat.
Oh, I was going to say, the way that I see it, insurance is a way to transfer risk. So what you're doing is when you have insurance on a house, you're transferring the risk of that house, let's say burning down, a flood, you're transferring that risk to the bank. With Bitcoin, you can't transfer risk. You either hold the Bitcoin and you take the risk, or you give it to someone else and you have counterparty risk. There's no way to transfer risk. There's no way to remove all risk, because there's a finite number of Bitcoin. Nobody can change that. Nobody can reverse it. Nobody can go back in time to change how Bitcoin works. So I don't think that insurance will exist on Bitcoin. I don't think you can insure Bitcoin. I don't think it's possible, because there's no physical asset there for somebody to replace. If it was a physical asset, it's much easier to replace. If it's a digital asset, then it's impossible, unless the insurance company holds Bitcoin in order to pay you back. There's no way to have insurance.
That's the way I see it going, is that they have their premiums, their payback, it's all denominated in Bitcoin. There's no fiat exposure. There's no, because fiat, it does not work as the denominator. The denominator has to be Bitcoin. And the insurance premiums, I mean, it's still up to an insurance provider to create a profitable business, right? Insurance, if it doesn't work, it doesn't work, and that company doesn't offer insurance. So if a company wants to insure Bitcoin, they have to figure out, okay, how likely is it that we would have a payout, and then we have to have that reserve of Bitcoin for that payout. That's the only way it's going to work. And I think Anchor Watch might already be doing this, I believe, which is an insurance company that you set up like a institutional custodian multi-sig with them, and you pay really high fees to have insurance, and they take those fees in Bitcoin and they back it one-to-one with other Bitcoin, basically. So if there's anything that goes wrong, your guaranteed through their insurance and through the contract you sign to get the same amount of Bitcoin back that you insured with them. I think it's the only way is to have it fully Bitcoin denominated.
But how would anybody confirm that you lost the Bitcoin? What if let's say, for example, I have an insurance policy on my Bitcoin. I send my Bitcoin to one of you guys and I tell my insurance company, oh, somebody robbed me. They took my Bitcoin. I have no control over it. How are they going to confirm that somebody that I know doesn't have the Bitcoin?
It sounded to me
the
like
same way
some of the Anchor Watch stuff is that once that happens, they basically have a team of like forensic auditors or forensic people who will go, they'll obviously watch that address. Anytime it moves, they're going to be on that, right? So Rajat, you could say that, yeah, I lost my Bitcoin, I lost the keys to it. But the moment you go to move that and spend it, they're going to be all over you because that's now on them. They've given you the Bitcoin from their reserve. Now that's coming out of their bank, essentially, their reserves. So they're going to make sure that that was in fact stolen. They're probably going to work as hard as they can to get that back from you. And I don't think it's going to be a scenario where you can just say, oops, boating accident. When you go to move that in the future, they're going to be on you like flies on poop.
But I mean, let's say, for example, what if you say somebody came to my house and robbed me? They took my Bitcoin and you don't know who it is. And of course, that person is going to send it to their own address and then they can go and move it. How are they going to know who that person is?
It's the same thing with insurance today, right? There's lots of insurance fraud, and it's on the criminal justice system to figure out if it's legit an insurable event or not. So it's kind of the same thing. If you've insured your business and your business burns down, the fire department's going to see, okay, is this arson? Is this intentional? Was this insurance fraud or not? So it would be the same thing. Is there evidence that you've actually been robbed? Is there, like, even with a car accident, they say, okay, well, whose fault was it? We have to figure out by the damage done to the car. Is it a rear ending? This kind of thing, right? So it's kind of the same. It's the same thing, and there needs to be people that understand all that and figure that out. And I think that's maybe part of it too, would be to set up some sort of surveillance around your Bitcoin or around your own security, so that if there was some sort of event, you would have proof of it to give to your insurer that, yes, I have been robbed and this is the proof. So there's the burden of proof still with any insurance.
And I think that Bitcoin, in the sense of this scenario, I think Bitcoin would actually be much easier to prove or much easier to find because everything happens on chain in a transparent ledger. So it might be hard, but I'm sure the team they have dedicated to finding that Bitcoin, I'm probably not going to be smarter than those people. Whoever's responsible for tracking down these stolen Bitcoin or lost Bitcoin, they probably have some experience greater than Jor sitting in his house here pretending like he lost his Bitcoin. But kind of where my mind goes with this, we talked about Anchor Watch as being one of the options today. What about like MicroStrategy? If we're thinking like one-to-one reserves with this, and they have 500,000 Bitcoin, and insurance is like a massive industry on this planet, right? So do you guys foresee a situation where MicroStrategy gets into the insurance game simply because they have so much Bitcoin? Like, imagine a high net worth individual with some Bitcoin paying their premiums in Bitcoin to MicroStrategy. They're able to leverage that kind of the way they've been doing so far. And they might say, we got 500,000 Bitcoin here. We're going to allocate maybe 5,000 to an insurance company without selling it. We're going to be able to accrue more of it and kind of compound it like they've been doing. And they'll say, well, maybe, we have 5,000 Bitcoin. That's it. We're going to have 5,000 clients or 500 clients, whatever that is. Do you guys see that as a possible scenario for MicroStrategy in the future?
Yeah, I've mentioned that before. I think that that's probably something that they might want to do, because what they can do is they have that collateral and they can back the insurance, or they can back their policies with that Bitcoin. And it's a game changer, because they know their clients know exactly how much Bitcoin they have. But I feel like it's going to be, unless they have policies that just the people keep paying over time, I think it might get very expensive in the short term if people try to make claims that are fraudulent.
Yeah, I mean, they have to figure out a system that ends up being a profitable insurance company, right? We can see that insurance companies have had all sorts of problems recently with like natural disasters. Like State Farm is pulled out of California. It's hard to get hurricane insurance in Florida. all this kind of stuff. So yeah, I mean, they would have to design a really robust insurance system for payouts, and that ends up allowing them to continue to be profitable. But it is possible because, as we've kind of begun to figure out here, is that the only way Bitcoin insurance works is with Bitcoin. And MicroStrategy has right now almost 500,000 of them. So they could back additional Bitcoin. They could have extra collateral. They could do all sorts of insurance type products that would be profitable as long as they can, not have too many claims and all that. They would just have to mitigate that risk, right? That's exactly what insurance is risk mitigation.
It's interesting. And so I think for the average person watching this right now, because, based on my thinking here in terms of MicroStrategy offering this Anchor Watch, like, you have to be putting up, if that's what we're dealing in is Bitcoin, you're going to have to be paying your premiums in Bitcoin. And so for the average person right now, we don't have a whole lot of sats to give up every year to insure our Bitcoin. And it is going to get more expensive over time. Looking back, paying 1 million sats to insure your Bitcoin back in 2025. So I think for the average person, because of this, with all this in mind, I think it just goes to show how important it is to kind of get everything in place right now in terms of your own security. You kind of have to pretend that you're maybe not going to be able to insure your Bitcoin for a decade or so until it's affordable and things are in place for the average person. So between now and then, I think that people should be taking very actionable steps to secure their Bitcoin as best they can.
Absolutely. Yeah. Then you don't need the insurance if you've done the security properly. If you've gone all the way to multi-sig, that's taking a lot of risk out. Multi-jurisdictional, multi-sig even, right? You're just eliminating risk as you go down the security road of Bitcoin. There's lots of options for additional security within Bitcoin, right?
Yeah. Completely agreed. If you can make sure that you learn as much as you can, keep learning over time, I think you're going to come across a lot of information that makes it helps you to make the right decisions.
Yes. That's a big part of it. It's kind of, as a Bitcoiner right now, you have to decide between, it's an investment either way. It's either going to be your time learning in Bitcoin, watching videos, figuring out who you can trust, or you're paying somebody an investment with money to help you with that. So one of the things we're going to be working on within this channel is Bitcoin security. We're going to have a nice playlist on the channel here for Maple Bitcoin. So keep an eye out for that. We'll give things in terms of private key management, in terms of single sig, multi-sig, other things we can be thinking about. So for now, that's kind of the best we can do. But yeah, let's wrap her up there, boys. You guys have any final thoughts here on the insurance and Bitcoin stuff?
No, nothing on my end.
All right. Well, since I'm the guy in the corner here, if you guys have been learning anything, getting any sort of value from the Maple Bitcoin channel, you can just point your phone at the screen, scan that QR code, send us a couple sats. We want to work really hard and do our best to not be influenced or paid by any sort of sponsors here on this channel. We're going to try to make it as community funded as possible. So if you got any sats, you can just scan the QR code, send us some for the Maple Bitcoin Lambo Fund and help us escape Canada. So thanks, fellas. We'll catch you on the next one.